Welcome to the State of Tech, the European edition, Monday, May 4th, 2026. I'm Samantha Lawrence.
And I'm Bob Russell. Today, global AI spending hits $2.5 trillion. The EU AI Act enforcement clock starts ticking. Apple ditches its cash-neutral policy to chase AI. Applied Materials buys NEXX for advanced packaging. NVIDIA's China share collapses to zero, and an AI tool helps astronomers confirm over 100 exoplanets. Let's start with the money.
$2.5 trillion. That's the forecast for global AI spending in 2026 alone, and it's bigger than every dollar spent on AI in the last 10 years put together. Amazon, Microsoft, and Alphabet are each committing hundreds of billions to AI infrastructure this year. The capital is flooding in, and the demand is broadening from hyperscalers to enterprises in every sector.
And the curve is genuinely vertical. A decade of cumulative spending, eclipsed in 12 months. What stands out is the breadth. It's not just chips and data centers, it's energy contracts, cooling, networking, custom silicon, software platforms, and the services layer on top. Every supplier in that chain is suddenly strategic.
Which is why we're seeing power purchase agreements with nuclear operators and grid upgrades being negotiated like cloud contracts. The bottleneck is shifting from GPUs to electrons.
And to permits. Building a gigawatt-scale data center in Europe takes years longer than in Texas or Virginia, and that lead time is becoming a competitive factor in itself.
The forecast comes amid Q1 earnings showing the big four hyperscalers raising CapEx guidance again. Alphabet alone is on track for over $90 billion in capital spending this year, most of it AI-related.
And Meta, which isn't a cloud provider in the traditional sense, is matching them dollar for dollar on infrastructure. That tells you the spending isn't just about selling AI services. It's about owning the stack to train frontier models.
The bottom line is that this scale of investment creates an entirely new industrial base. It also concentrates power in a handful of U.S. firms, which has knock-on effects for everyone else.
And it raises the bar for anyone trying to compete. If your rival is spending $100 billion on compute, your $10 billion R&D budget suddenly looks quaint.
For Europe, this is opportunity and exposure in equal measure. European AI startups, chip designers, and research labs will see real demand. But the lion's share of that $2.5 trillion flows through American balance sheets, and Europe's sovereign cloud ambitions look modest next to it.
Brussels is going to have to decide whether to subsidize capacity, regulate access, or both. The Invest AI Fund and the Gigafactory plans are a start, but the gap with U.S. CapEx is widening, not closing. Speaking of regulation, the EU AI Act enforcement begins this August. From that date, organizations operating in Europe must classify their AI systems by risk level, build oversight plans, run red team tests for vulnerabilities, and publish detailed transparency information. High-risk applications in employment, credit, education, and public services face strict conformity assessments and ongoing post-market monitoring.
This is the moment AI regulation stops being a policy debate and becomes a compliance line item. Every general counsel in Europe has been preparing for this, and a lot of mid-size firms are still behind.
The red team requirement is the one I'd flag. It's not just paperwork. It requires genuine adversarial testing of your model, documented, repeatable, and reviewable by regulators. That's a real engineering commitment.
Fines can reach up to 7% of global turnover for the most serious violations. That's higher than GDPR. And it applies to providers and deployers, not just developers.
Which means a French bank deploying an American foundation model is on the hook for compliance, even if the model was trained in California. That extraterritorial reach is exactly the GDPR playbook.
Key takeaway. The AI Act will likely shape how AI is deployed worldwide, the same way GDPR reshaped global privacy practice. Companies tend to standardize on the strictest rules they face.
For European firms, the short-term pain is the compliance cost. The longer-term upside is trust. If your AI product is AI Act compliant by design, that becomes a selling point, especially in regulated sectors.
And the smaller players need help. The Commission has promised guidance and sandboxes, but small and medium businesses are nervous about the cost of conformity assessments. Quick interruption. If you listen to the State of Tech regularly, hit that like button and subscribe. That way, you'll never miss an episode. Okay, moving on.
Apple has dropped its net cash neutral policy. For nearly 15 years, Apple ran a strategy of returning roughly all surplus cash to shareholders through buybacks and dividends, more than $1 trillion in total. That's now over. Incoming CEO John Ternus gets the green light to spend.
The shift was announced alongside Q2 2026 results, and analysts read it as preparation for big AI infrastructure investments and possibly a major acquisition. With Meta and Alphabet committing hundreds of billions to AI, Apple's restraint had become a competitive weakness.
The market has been pricing Apple as the AI laggard for over a year. Apple Intelligence underwhelmed, the Siri overhaul slipped, and rivals shipped features Apple was still demoing. This policy change is essentially an admission that the old model can't compete.
Apple is sitting on roughly $50 billion in net cash and generates close to $100 billion in free cash flow annually. That's enormous firepower if they choose to deploy it.
The acquisition question is the interesting one. Apple historically buys small. A $10 billion deal would be a record by a wide margin. But to close the AI gap, that may be exactly what's needed.
With Apple in the bidding, AI talent and startups get another deep-pocketed buyer, and prices go up across the board.
European AI firms with strong on-device or privacy-preserving technology fit Apple's profile particularly well. There are several candidates in France, the UK, and the Nordics that would suddenly be very attractive.
And for European users, faster AI features in iPhones and Macs. But the data and consent questions get harder, especially under the AI Act we just discussed. Applied Materials has signed a definitive agreement to buy NEXX, a key supplier of large-area advanced packaging deposition equipment. The deal expands Applied's panel-level packaging portfolio, which is becoming critical as AI accelerators move beyond the limits of traditional silicon wafers.
The technical story matters here. Modern AI chips are chiplet designs, multiple GPUs and high-bandwidth memory stacks integrated into one package. As those packages get bigger, the industry is shifting from round wafers to rectangular panels, which are more efficient at scale. NEXX brings electrochemical deposition expertise for exactly that transition.
This is the unglamorous middle of the AI stack, but it's where bottlenecks are forming. Advanced packaging capacity at TSMC has been the limiting factor on NVIDIA's shipments for nearly 2 years.
Exactly the kind of deal that doesn't make the front page, but moves the industry. Whoever controls advanced packaging tooling controls how fast AI chips can scale.
More efficient packaging means more powerful, more energy-efficient AI accelerators, and that flows through to every cloud provider and every AI product.
Europe doesn't have a major advanced packaging player, but ASML remains the linchpin upstream in lithography. The combination of U.S. tooling consolidation and Dutch lithography dominance is what makes the AI chip industry possible.
And it underscores how dependent European AI ambitions are on a global supply chain that runs through Eindhoven, Taipei, and Santa Clara.
NVIDIA's market share for AI accelerators in China has fallen to effectively zero. Tightening U.S. export controls have closed off the market entirely after years of restrictions, redesigns, and workarounds. At the same time, NVIDIA's Asian manufacturing partners are rallying as physical AI and robotics push expands, with those partners now accounting for around 90% of NVIDIA's production costs.
Zero is a remarkable number. 2 years ago, China was a quarter of NVIDIA's data center revenue. The redesigned H2O chip kept some business alive, but the latest tightening shut the door entirely.
And the Chinese response has been to accelerate domestic alternatives. Huawei's Ascend line is closing the gap faster than expected, and Beijing is funneling state money into the domestic AI chip industry.
We're watching a genuine bifurcation. 2 parallel AI hardware stacks, one Western, one Chinese, with limited interoperability.
The bottom line is, fragmentation is expensive. Duplicated R&D, smaller addressable markets, slower standards. The whole industry pays for it eventually.
For Europe, the lesson is to invest in domestic capability where possible and diversify partnerships where not. The European Chips Act is a step, but the scale gap with the US and Asia remains huge.
And European companies exporting to China face their own export control headaches since US technology is embedded in almost everything they make.
And to close on a lighter note, astronomers at the University of Warwick have used a new AI system called Raven to confirm more than 100 exoplanets, including 31 previously unknown worlds. Raven analyzed 4 years of data from NASA's TESS mission, which watches millions of stars for tiny brightness dips that betray a planet passing in front.
The findings are published in MRAS, focusing on short-period planets, the ones that whip around their stars in days. Confirming exoplanets is painstaking work. Raven dramatically speeds up that process by sifting through observations at a scale humans simply can't match.
TESS has been generating candidates faster than astronomers can vet them. Raven closes that gap, and it does it with remarkable accuracy on the short-period candidates where false positives are common.
It's a quiet but important shift. AI is moving from hype headlines to genuine scientific productivity. And exoplanet hunting is one of the cleanest examples.
Every new world we confirm sharpens our picture of how planetary systems form. 31 new ones in a single paper is a meaningful jump.
ESA's CHEOPS is already running, and Plato launches in 2026 to hunt Earth-sized planets around Sun-like stars. Tools like Raven slot directly into those pipelines and could deliver discoveries on day one.
Warwick leading on this is a nice reminder that European universities remain genuinely world-class on AI applied to science, even when the trillion-dollar headlines are elsewhere.
And it's the kind of AI story that doesn't worry anyone. No layoffs, no copyright lawsuits, just more planets.
Today we covered the $2.5 trillion AI spending forecast, the EU AI Act enforcement starting in August, Apple ending its net cash neutral policy, Applied Materials buying NEXX, NVIDIA's China share collapsing to zero, and the Raven AI tool finding new exoplanets.
Want to know more or react? Visit stateoftech.eu or email us at info@doorzetters.net. State of Tech, the tech world in 15 minutes.